The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good morning, Money Masters and Treasure Hunters. Welcome to the February 19th wonderful Wednesday edition of the Money Masters Show. Excuse me. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, well, just simply the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs, my favorite empowering beliefs, and that is become your own electrician, the electrician of your beliefs. And the reason is because beliefs, as you know, they have the power to create and the power to destroy. You and we've got the awesome ability to take any experience of our lives and create a meaning. Well, sometimes we might take a meaning and disempower us, but mostly what we want to do is create those meanings that can literally save our lives, empower us, and take us to places we never even dreamed of. Think about it like this. There truly is only one thing in life that you can control, and that is the meaning that you give to something. That's the beauty of the markets we trade. We've got bulls, we've got bears, one that sees an event as a selling opportunity and one a buying opportunity. You see, it's your beliefs, the meanings that you give to events, to statements, to criticisms, all of the above. You are the one in control of that meaning. And that's really pretty cool. I think it's the most cool thing when you really get a grasp of it. Because when you do, what you realize is that what you and what we can or cannot do, what we consider possible or impossible, it's rarely a function of our true capability. It is more likely a function of our beliefs about who we are. And that matters because each of us, we're all trying to break through, and all of our personal breakthroughs begin with a change in beliefs. The question is always, how is it that we change our beliefs? I've found the most effective way to change our beliefs is to link our pain. Pain, you got to have pain, folks. You got to link your brain and associate massive pain to an old, disempowering belief. You've got to know that at the deepest level, that belief has not just cost you in the past, it's costing you right now, here, today, in the present, and ultimately will only bring about more pain in the future. That's what is really referred to as the Charles Dickens process. And that's why I say that knowing what we don't want is just as important as knowing what we do want. And the reason is, once we rid ourselves of a disempowering belief, then we kind of have to fill the void. And that's the beauty. We want to fill that void with tremendous pleasure, the idea of adopting a new empowering belief. Folks, this is a tool you want to make sure that you pass on to your kids and your friends and anybody out there, and certainly yourself out there. You want to be able to rewire yourself. This is how you rewire yourself, because we need to know that at any moment, a decision that we make can and will change the course of our life forever. Could be the next person that you stand behind in line. It could be the next person you sit next to on an airplane, the next phone call you make. How about the next phone call you take? Could be the next movie we see, the next book we read, page we turn. Any of these things could be the single thing that causes the floodgates open. Hey, it might be the next free report that you download, such as Major Market Tops and Bottoms. That's available on the homepage of TFNN.com. You should download that. Maybe that is going to be the thing that says, all of the things will fall into place. Folks, that is the epiphany I had when I developed the Rhodes Momentum Indicator, the Market Analyzer, the whole trading strategy out there. And I know that you can have your epiphany as well. Massive determined action, folks. That's all it takes. Rewire your system at all times. Rewire, folks. 877-927-6648. That's our call-in number. Right now, we've got the Dow. It is on fire. It is on fire. It's up 71 points, trading out at 16,201. It hasn't taken the rest of the market with us. It's up 3.5 points in the S&P 500. The composite is down 6 points. Russell 2000, it's flat today, so it's taking time off. I guess the Russell, which has been strong as of late, was just simply out to the party last night. Maybe it got snowed in. Apple is down $2.39 right now. Microsoft up a tick. Google back $6 and change. CF Industries. Going to take a swig of water. Every now and then, one of those invisible pieces of dust, as I'm doing a breath on the inside, boy, it gets lodged right there in the throat. Nothing like having a little bit of water right next to you. Anyway, CF Holdings, it's up $21. It's up 9 points this morning. Signet Jewelers, they're dealing with a buyout between them and Zale Corp, so they're up a nice 16%. You got Columbia Sportswear, COLM. They make some nice stuff out there. They're up 10%, up $8 and change this morning here. Let's go see if they were out with numbers. What do they generate? Revenues, net sales, $533 million versus $501, so they beat the top line. That looks pretty good. Net income, let me see if I can find that out here. Net income looks like $36 million versus $39, so not doing so well on the bottom line, but on the top line we see some growth out here. Panera Bread, we want to take a look at that. It's up 4.7%, up $8 and change to the downside. SM Energy, we took a look at that earlier. That's getting hammered. Big volume coming out of that. Priceline, that looks like that's got quite a bit lower to go. Priceline.com, it's off $8, not a big deal out there. We took a look at Priceline yesterday on a weekly chart. It completed an A to B equals CD pattern. It was some extension, obviously, but that doesn't mean that that's where it's going to end. And it's just trading a bit lower here. Google's off $6, Netflix down $5, Tesla off $5, Jazz Pharmaceuticals off $4 right now. Regeneron Pharmaceuticals down $3, Pharmacyclics off $3, a lot of threes in the pharma business. Wynn Resorts off $3 as well. Solar City down $3, a lot of threes out there. Again, 877-927-6648. Let's check out the indexes and see what we have going on. We got to start with the Dow, don't we? Let's go start with the Dow and see what it is doing out here. I just have to find the Dow chart. There we go. No, that's not. That's the NDX. Where's the Dow? It should be right. Here we go. Now we got the Dow is right in front of me all the time. I just need to put on my glasses, my thinking glasses out here. So the Dow now taking out the most recent high. That took place 2 days ago, February 14th on Friday. 16,175 was the number. Of course, the Dow is above. It closed above the 0.618 retracement level. It wants to join the party. It wants to get up to the 0.786 area. 16,268. The Russell 2000's already done that, so it looks like the Russell being flat here is just simply waiting, just simply waiting for the Dow to join in, because these are the only two that aren't up towards their swing point high. So the Dow is up nicely today. We'll see if there's any volume. There was no volume yesterday, but in yesterday's case, we just don't know, was the volume as a result of some of the snow, whether it be in New York, whether it be in Boston. I saw some reports this morning talking about all the major snowfall out there. Now, look, folks, I lived in Detroit for a long time. Well, I think I've lived in Florida now longer. And, of course, Florida is Michigan's lower peninsula, not Detroit's lower peninsula, but certainly Michigan's lower peninsula out there. And I believe they had so far, I think they're on record as the third largest snowfall, third or fifth. It's Chicago, so it's Illinois. I think I actually said they used the word Detroit and they used Chicago, but I'm assuming I don't know if they meant Michigan and Illinois or not. But so one is number 3 all time and the other is number 5. That's a lot of snow out there. That's for sure. I can tell you, living up there, I only saw maybe a couple of those events out there. Mostly it was just cold and nasty and gray. In any event out here, right now the Dow is not gray. It's at 16,206, 77. It's at its session highs, so it's headed up to the 16,268 level at a minimum out here, and that is what's going on inside of the Dow. We'll take a look at the ETFs here momentarily, but let's go take a look at the rest of the indexes here. The XAU up towards its session high here right now. It wants to get up to 104.39 now. The XAU, it is above the 200-day exponential moving average. Last time that it was above that level was back in November of 2012, so what, a year and 3-4 months out there. So it is above. So it's real, folks. The move, the breakout in the XAU, it's real, no question about it. If we go take a look at the NDX 100, now the NDX is doing nothing here other than moving sideways. Yesterday, getting very close to the 1 to 1.272 expansion of its last set of swing points. That's your expansion from the January 22nd level. That's at 36, 34, 65, down to the low on February 5th out at 34.1888. 36.93 would be your 1.272 expansion. Right now today, just kind of hanging out, moving sideways out there. Let's take a look at the New York Stock Exchange. Now, this is the ever-ready bunny. This is the one we do want to keep our head, our eyes, our ears glued to, because it's from the New York Stock Exchange where we're going to understand whether or not this market is truly going to bust out, because it is the New York Stock Exchange that is the only index that has not been able to get above the 2007. Well, I won't say the only index. I think if we go look at the FTSE, it, too, has been struggling out there. But in the case of the New York Stock Exchange, it is trying to get up to that 10,387.17 mark. It's trading right now at 10,346. It has had great market breadth out there. When we take a look at the summation index, when I take a look at the price oscillators, they're at levels where initiation moves take place. They're either initiation moves or blow-off tops, and the blow-off top is something that should have taken place 2 days ago, and it did not take place out there. And that says, initiation. Well, we'll know whether or not we've got an initiation type move out here if, in fact, the New York Stock Exchange can close above 10,387. And if it can, it is like a 6,000? Is it about 6,000? Maybe it's a 6,000. It's a 6,000 point consolidation that the New York Stock Exchange is traveling in. So it is a doozer out there, and that is on the NYSE, and we know what happens when you break out of consolidations. They make a move equal to or greater than. That's the measured move out there. So we'll continue to pay attention to the New York Stock Exchange. In my opinion, the most important index for us to be monitoring and following. Back at the ranch here, let's take a look at the Russell 2000, now up about 44 cents. So trying to join into the party out here. It's trading at 1161.98. 1160.78 is your 0.786 retracement. The Russell 2000 at minimum wants to go close the gap out here. That's a low at 1166.67. It's from the trading session of January 23rd out there. But, of course, the one that you want to really keep an eye on is that second three drive to a top pattern that had formed inside of the Russell 2000. Taking out that area would be very bullish, and that means a close above 1182.04 would be very bullish. Coming back and testing that level and then failing, that's always a possibility, and I would say, okay, that very, very bearish pattern would be still in place out here, but it looks like 1182.04 is probably the area where the Russell 2000 wants to make its way to. If we take a look at the SOX index out here, heck, the SOX index, this thing is strong. This isn't just strong as bull. This is strong as big, strong bull out here. 568.29 is the next target level. It's at 561 right now, but I don't know that 568.29 or 569.67 is really going to stop this freight train out here, because this is an explosive move off of the C point out here. And you can see it has had nothing but up sessions since the low put in on February 5th out here. So the SOX index looks very, very strong. And you certainly, in a bull market, you want to see the semiconductor index moving north. And that's what you see. If we take a look at the S&P 500 right now, it is trading up 5 points at 1845.92. It's on its way to 1850.84. That's the swing point high out here. That's the swing point high from January 15th. Right now, the Dow's up 87, S&P up 5. We'll be right back, folks.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 85, S&P is up 5, and, back to the New York Stock Exchange momentarily. It's up a nice 32 points this morning. We've got good market breadth so far. Net advancing issues of about 762. But here's the key, with the New York Stock Exchange. Now, at the end of the day, if the New York Stock Exchange finishes up, in order to keep that momentum going, in order to keep that initiation move truly in play here in sync, it needs to do it with more than 798 issues. I think will go ahead and the oscillator won't change out there. I think that's my math that I put in last night. So it needs to produce 798 or more net advancing issues out there, because if it doesn't, if price is moving higher but the price oscillator is moving lower, it sets up a divergent pattern. And if that divergent pattern continues as it approaches that 10,401, 10,397, whatever the number was for the 2007 level, you can see the last time that it did that was right back here. Into the December 31st. If you're watching us on Tiger TV, it was making a higher high, price was making a higher high, and then all of a sudden we saw the price oscillator start to make lower highs out there. We saw the price oscillator start to fall off. And when you see that divergent pattern, it's a real warning sign out there And with the New York Stock Exchange being the larger market breadth, it is, as I say, I think the most critical, the most critical index for us to be paying attention to is the New York Stock Exchange out here. So it's very important that it not just take out the high, but it do it with the rising price oscillator. Now, that price oscillator is rising, to an extent here where it is truly getting into the bought condition. Getting up to this level with the rising price oscillator and just simply moving sideways, that's fine. That's no problem out here. But seeing price continue to advance from this stage here, as it did, it made that same type of price advance back on December 24th. So just, as we're going into the final, Santa Claus rally out here, so from December 24th to the 31st, so we were dealing with 2, 4, 5 trading sessions out here. We saw the New York Stock Exchange make that higher high on a lower price oscillator out there, and that then went ahead and eventually led to, or was a signal of the market decline that we saw that took us down to the 9,700 area out here. So that is, that's what we really want to be paying attention to when it comes to the New York Stock Exchange. If we go back out here to the indexes, the composite, had a request to take a look at the composite earlier, so we'll do that. The key number here in the composite, by the way, at the end of this week, we're just into our day and a half worth of trading out here, so we got a lot of time left in the trading week out here. The key number here in the composite, which is struggling today, it's just having an inside day out here. But let's face it, it's been the strong dog. It's been pulling the horses up, so no reason for it to not just take a bit of a pause out here. But the key number in my book on the composite is the 43.22 level. And the reason is the daily chart right now. And so the daily chart says, hey, no reason for this to not move up to the 43.22 level. That's your 1.272 expansion of its last set of swing points out here. But if it ends the week, I don't care if it gets up there, no matter what it does, if it ends the week back below 43.22.26. That says the market is definitely not out of the woods yet here, and that's important when we're taking a look at what's going on inside the strong hands inside of the market. But right now, things look good. These are the numbers for us to continue to pay attention to as the week continues to unfold out here. So that's what's going on. I think we've taken a look at all of the indexes out here. We didn't take a look at the VIX index. Let's go take a look at the VIX. Let's go see what it is doing here this morning. So the VIX now, so this is important, muy importante. The VIX here, what it did was it opened up at the 50-day exponential moving average, the area where a lot of carnage is done inside of the marketplace. So now what it did, so it opens up at the price level of 1485. The 1487 number is your 50-day exponential moving average, and since then has sold off. If you see the VIX get above 1487 today, maybe you got to give it a few pennies here, so 1488 doesn't qualify, nor does 1489 or 1490, so something a bit more substantial than that. But if it does get above that, now all of a sudden you've got, what is suggesting that you've got liquidity that's drying up. And that's how I really use the VIX index out here. I use it as a liquidity gauge, not a fear gauge or anything like that, just simply a liquidity gauge. When the VIX is below the 50-day, you've got liquidity in the marketplace, and that's where you see a market either move sideways or higher. When the VIX gets above the 50-day, it starts to tell you liquidity is drying up. That is what usually drives prices lower out here. And so far, so good today for the bulls out here. Again, the number about 1487 or so. So now we have taken a look at really all the index. Let's go take a look at some of the core charts out here. We won't have time. We'll have to do some of this when we get back from the break. But let's go take a look at IBM. We want to take a look at IBM and Visa. IBM now into the gap. That's a gap that was created back on January 21st and 22nd out there. The top of the gap is the low of January 21st, 186.79. Looks like that's where IBM is headed to. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target and stop price of each stock in option trade. With market insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Right now, Dow's up 88.88 out there, all kinds of eights. I believe that is good luck over in China. We were taking a look at IBM before we went into the breakout here. It is inside the gap that was created. So IBM gaps down with some big volume here. A trading session of January 22nd, 13.8 million shares to the downside. You closed inside there. You didn't really close inside the gap here. You did form a little doji candle yesterday. So a doji at resistance has a lot of meaning, and we know that there was resistance here. Let's do this. Let's get rid of this on the screen. So let's take a look at this a little bit closer. So when we take a look at the gap, the first area of resistance is going to be the top of the gap out here, and you could use either the trading session from January 22nd, but since the following day, intraday on the 23rd of May, just a slightly higher high, I'm going to go ahead and use that session. We'll put a red line across the screen. It doesn't really matter which one we take a look at. Now, what we had out here yesterday, true doji candle, because the open was at 183.18 and the close was 183.19 out there. And when you have a true doji candle, especially at resistance, it has a very important meaning out there. And that's what we had with that doji candle yesterday. And resistance, why? Because of the gap down that was created with the 13.8 million shares out there. Now, on that doji candle, it's not the top in this case here of the doji that becomes your resistance area because there was a higher high on the prior session. And that prior session being the February 14th time frame. So that really is your resistance level. So what you're looking for in the case of IBM today is what you're looking at, doesn't matter whether you're bullish or bearish, you're still looking for the piece of information. And this is what it means. If you see a close above 184.43, that's the February 14th high, that would be very bullish. That would say that, okay, price is now broken above a resistance level, and that would then say that you would go up to resistance level number 2. In the case of IBM, that is certainly going to be the low of the swing point or the gap down area. We'll make that in red as well. That's going to be your low from January 21st out there at 186.79. Now, the key there is really the volume. And it's a combined volume. It's the 11 million shares on that trading session or really the 13.8 million shares on the gap down volume. Today so far, IBM is up with 1 million shares. So we've been trading for a little over an hour. It does not have the juice. It does not have the energy. It's about half, maybe 60% of the energy that it had on the way down out here. But we have a lot of time left in the trading session. But bullish, at least to go ahead and close that gap. That would be the signal if you see it close above 184.43. If you don't see it close above 184.43 today, in the case of IBM, it was not able to break above resistance. And all that was really set up by not just the downdraft, but by yesterday's doji candle as well. Now, I believe Visa is the number one holding inside of the Dow right now? Let me see here. I think I've got that off to the side. Do I have that from a weighting structure standpoint? Let me do this here. Yeah, you got Visa is somewhere around 8%, 8.5%, something like that. So IBM, it dropped to the number 2 slot out here. So let's go see what Visa is doing now. It's a one-letter symbol. I got to do it like this. There we go. And Visa right now trading out at 227.79. No real damage that I see here in Visa. Let's pull this back. Let me get rid of everything on the chart out here. So Visa had a really nice breakout session on January 17th. Wide price spread, accelerated volume as it was making a move higher. Made a higher high on a little bit lighter volume out there on the following trading session on January 21st out here. Looks like an A to B equals CD down. Let's see if it actually completed that pattern out here as it was making this move down. No, it did not do that. And, of course, let's see, as it was passing the B point, which in this case here would have been the low from January 27, 4.8 million shares. It did it with 5 million shares. That was on February the 3rd out there. And nonetheless, it has rejected the lows. What was it trading into? Absolutely nothing that I see out here that we could use as a gauge. Nonetheless, there was a open gap out here that was formed inside Visa on January 23rd to the 24th. The low of that gap here, which is what it's trying to trade into right now. So it closed the gap here yesterday as price got inside it. We'll use a red line there. But here's the number one weighting inside of the Dow. So, with the Dow trading up at 88 or 9, I don't know where it is exactly right here, right now. You want to be paying attention most certainly to Visa. So this had 3.4 million shares on January 23rd. Very next session, 4 million shares. Yesterday, it was moving up with 3.3. So not too shabby. So far today, 468,000 shares multiplied times 6. 6.5, which is easier to multiply times 6. That says you're at about 3 million shares, so about the same volume pattern that we saw, actually a little bit lighter than we saw here yesterday. But it's still not too shabby. Now let's take a look at retracement levels for Visa. What has it done? What is it doing? It's above the 0.618 level, so 230.34 is the next target. I would have to say Visa is going to go ahead, since it's the number one weighting inside the Dow. If it's going to make it to the 0.786, what it's going to try to do is go tag the January 21st swing point, and that's 230.82 is a low, 235.50, and the key number is 4.9 million shares. If Visa starts coming into that with volume accelerating more than 4.9 million shares, number one, says you'll go test the high at 235.50, and it could be more than that because if it gets above 235.50, what you will do is it will form an A to B equals CD up pattern. If we take a look at retracements, maybe that's what it was doing as it was getting down there. Yes, there we go. So as I say, when Visa was moving down and it had passed a swing point with volume, and I said, well, what's it going against? I couldn't find anything. Well, it was going against Leonardo Fibonacci. That's exactly what it was doing, because if you go from a swing point low, which could be your A point of an A to B equals CD, that's what you want to be paying attention to. Bullish or bearish, doesn't matter. You want to take a look at what the top weightings are inside these indexes. And so if you go from the low on the December 10th, that's at 199.43 to the high at 235.50 on January 21st. The pullback here stopped right at the 0.618 retracement level, and that was at 213.21. Yes, it pierced it a bit, but the close in both sessions out here, meaning February 3rd and February the 4th out there, was a close back above that level. So, want to watch Visa. We'll make sure that we keep this on our screen here, and the key is going to be what's happening at January 21st at about the 230.82 level. That is on a Visa. Let's go take a look at Intel. I mentioned the semiconductor index was performing very well, and it's doing it without the help of Intel out here. So Intel has been struggling. So here's the key thing with regard to Intel. If the market really cracks, and you were to see a crack inside the semiconductor index, I still believe that Intel's number one weighting inside there. That would be where you would look. You wouldn't play that to the short side, but you could come take a look at Intel to see what it is doing, because maybe this is trying to form an A to B equals CD to the downside out here. Intel's going to struggle as it gets up into this downdraft. This gap down from January 17th, that's assuming that it can even make it up there. It is not showing any kind of strength. You can see here on the move up, if we just take a look at the volume off of the swing point low on February 4th, what you will see here, let's draw a line. I'm not even using that candle, but what we can see here is declining volume as it has made its way up here. So in the case of Intel, it is suggesting it's forming an A to B equals CD to the downside out here. Now, it had formed a nice 1.272 butterfly. It did that on the trading session of January the 15th. It made, remember, there are always 5 outcomes of any type of, Gartley pattern. When you take a look at a butterfly pattern, the more likely outcome is just simply pulling back to the 0.618 or 0.786 level, and that's what it did. It got back just below the 0.618 area. Nice little morning star reversal formation out here that took place. That is the trading session of February the 6th out here. But if we take a look at the type of retracement that Intel has done, it has not even made a dead cat bounce. It has not even made a dead cat bounce, which would have been $24.88. So you've got some real struggles going on inside of Intel. Let's go take a look at the BHP Billiton. BHP is the ticker symbol here. That is trading out at $70.78 right now. Let's see. You had some really nice volume yesterday as it gapped up. So this looks pretty healthy. Let's go see what it is doing out here. It's going to come back and try and test the swing point. Now let's take a look at the retracement. Let's just confirm that. Let's go from its swing point high on November the 6th. 2013, down to the low that was put in here on February the 3rd. That was at a price level of 62.68. What it's done today so far, 70.76. That is the 0.786 retracement level out here. Let me see here. So we've got one of our denners, one of our princesses in the den, got into this equity on February 10th. Nice trade there because that was somewhere around the 65 area. The high is 65.58. It's at 70.77. So all you want to do is just simply continue to adjust your stop on the way up. And I say use some expansion of the average true range out there. In fact, Stevie's son here can probably go calculate that. Give me a moment here to switch over to a different chart. I can go ahead and bring up the tool. So let's do this for our dinner here. Let's take BHP. And, folks, this is the tool that I'm putting up here on my screen is my position size calculator, which is key, in my opinion, to any kind of trading that you do out here. See, all I did was I typed in and this is where all my clients get access to it. And if you've never tried it, now's the time. You get access to my newsletter, 30 days, unconditional money-back guarantee. You want to do that. You certainly want to download the free special report. All my clients were sent that special report yesterday in a special link out there, or actually the actual report they had. And in any event here, the position size calculator, the beauty of it, the whole key to this game that we play boils down to one thing more important than anything else, and it's called position sizing. And the second element is using stops. My belief is that if you use a stop that is within the average true range, you actually know where price is going to go. And if you know where price is going to go, please give me a call. because we will make a absolute fortune out there. Since my belief is we really don't know where price is going to go, we just use probabilities out here. It is always good to understand what the average true range is, because what that means is that on any average day, in the case of BHP Billiton, over the course of the last 10 trading sessions, well, it's probably 9 trading sessions because we've had holidays such as President's Day in honor of George Washington out there. At least that's really why the holiday began. So we've had 9 trading sessions, and over the 9 trading sessions, this equity here has moved on average 97 cents. Now, that's not the highest level that it's moved. We've seen over the last trading session, this thing in one single day can move $1.83, or at least over the last 9 days it has, and as little as 42 cents, which took place on February the 10th out here. So I always like to use at least the average true range, typically some type of expansion of that, 1.618. In this case here, let's actually continue to do the work out here. So it's trading at 70.75. Let's put this. Let me go ahead and complete this here. It's a stock. We're bullish. Just have to fill in some of the blanks out here. I'm not suggesting that you take this trade. It's at 70.75 out here. This will just simply up 70.76 out here. Our projected sell, I don't know, we're going to call it 72.96 just for the heck of it. So right now, this would suggest here that the stop ought to be set right around the, if you're going to use the 1.618 expansion, right around the $69.19. Now, what's cool about this, folks, here is that, if you were taking a trade, now just to show you how this actually works out here, what this tells you is this shows you exactly where your entry price is, or approximately where your stop ought to be placed, how much you're risking. Now, this is cool because it takes into effect on any account balance. It takes into account your 1% move out here, your 1% move, and that is key, your 1% risk, I should say, not move, your 1% risk. So on a $10,000 account, your risk is $100, and this would tell you would go ahead and buy 64 shares. Now, look, this is a guideline, so don't buy 64 shares. If you use this tool, buy 60. Or buy 70. You're just trying to stay within a range. Now, don't buy more shares that are going to go ahead and put 45% of your working capital at risk out there. Just simply reduce, either expand your stop, or just simply reduce the risk that you put in on a trade out here. And that's the best way to use this tool. Now, you don't have to use a 1.6 expansion. You can use something that's a little tighter, like 1.272. So this works on anybody's trading system out here. And if you were to use, and so inclined to use the 1.272 as a trailing stop, that number would be $69.53. That is on BHP Billiton. Nice volume coming into this yesterday. Looks like this wants to make a run for those highs at about $72.96 out there. Let's take a look at some of the other equities moving and grooving. Let's take a look at some of the other core equities that I like to take a look at, and that is, let's take a look at ExxonMobil. Now, ExxonMobil dumped itself back into that consolidation range. That typically is never good out here. Now what it's doing, it poked its head back above that level, but what we can see here in ExxonMobil, kind of weak. Not kind of weak, very weak compared to the rest of the market. Let's do this. Let me get rid of that retracement level out here. Let's go see what it actually has done thus far. And you can gauge this to the rest of the market out here. Now, ExxonMobil is a strong weighting inside of the S&P 500. It used to be number one, may still be number one out there. And what ExxonMobil has at least done at this stage, it has at least made the dead cat bounce a 0.382 retracement. So it's trading above that area. It came into the 0.382 retracement. It did it with a wide-ranging bar. If we take a look at the volume behind that move out here, the volume behind that move as it came into that wide-ranging bar, nice, 18 million shares going against the waterfall downdraft area of 17 and 20. So it had a nice move out here on February the 14th, on Friday. What does that say? It says that it wants to move up to 96.97. Now, if we pull this up here, you're going to see here, we took a look at that doji candle of the IBM yesterday, right? Guess what we have here right now? You've got the doji candle from yesterday inside of ExxonMobil. Looks like it's taking out resistance, folks. 877-927-6648. We'll be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 80 points, S&P up 4, composite roaring back here, down 2 points out here. Russell 2000 up a point. We check in here real quickly on the Euro Japanese yen. When we began the show, or began the last, the first show, I should say, at 9 o'clock, we saw the Euro Japanese yen here, and that is that's the carry trade out here. That's the currency pair that tracks the U.S. stock market better than anything else. You want to be paying attention to what's going on there. That was just simply moving down into into the bottom of a rising price channel, made a nice bullish engulfing candle. That was at 9 o'clock. We're just coming into the 11 o'clock session, and therefore that ever important second opinion, meaning the very follow-up candle, is giving some follow-through out there. So that is important. That is bullish. Now, the real key here, because on an intraday basis, on a 120-minute chart here, we do have a 1.272 butterfly, a small one that has formed. That says that the key resistance level right now, 141. Where did it go here on my screen? 141.02 is the number. If you see a move above 141.02 in the Euro-Japanese yen, well, if we see that, this market will be substantially higher than where it is as we speak here right now. And that's the resistance area there. We were talking about some resistance areas before we went to a break. I believe it was the stock chart of ExxonMobil that we had up on our screen. So there's two little dojis out here that are kind of a resistance level. One back here on January 30th, one here yesterday. Yesterday is the one that is more important out here. That says that the high, since yesterday's high, was higher than the prior candle. That says that 94.72 is resistance. You're at 94.83 right now. If we see ExxonMobil get above that level, it ought to make its way at least to the 0.618 retracement area, which would be about the 96.97 mark out there, and that is on ExxonMobil. We take a look here at let's take a look at J.P. Morgan. Let's go see what's going on inside the financial sector out here. J.P. Morgan as well. This stock chart here looks a lot like the Visa stock chart, right? And that looks like it took out a B point with volume. Let's see, 23 million shares on January 27th, and it takes it out with 28 million shares on February 3rd out here. So it was making the exact same pattern, but it said, you know what? I took out a B point, and so what to you? And that's exactly what it has done here. Now, as we can see here, it's not as clear. Well, the volume is sort of a declining volume on this move up here. But nonetheless, let's take a look and see what J.P. Morgan is doing. It is trying to get into its swing point from January 16th. So we don't really need to take a look at retracement levels. The January 16th of 2014 is its most recent swing point high. The low is 58.74. There were 21 million shares that traded hands on that day. Yesterday, this moved up into it with 14 million shares. So it did not touch that area, but it was moving up there with some light volume. Last time we saw any kind of big volume was on February 7th. So look for J.P. Morgan to go test that level. If it closes inside 58.74, light volume or not, it will go ahead and test the high at 59.82. But that's what's going on inside of J.P. Morgan. Let's finish the show out by taking a look at Apple. Let's go see if anybody's taking a bite out of this Apple out here. Yesterday, we see a little doji high inside of Apple, and the leaves are falling off of the tree out here. Yesterday's open, 546. Yesterday's close, 545.99. That's what a doji looks like coming into resistance here of the gap down. That is interesting. So this thing came into resistance, the gap down meaning the low of January 27th, formed a little doji in that window out there, and now you're seeing some leaves fall off the tree out here. If it closes lower today, that is bearish for Apple. Folks, stay tuned. It is Wonderful Wednesday. That means we've got our man Basil Chapman is up next. We're going to go ride that wave. After Basil, Larry Pesavento, then Daryl Martin, David White, and the one and only The Tom O'Brien Show from 4 to 6. Have a great Wednesday, folks. Look forward to seeing you tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.